Good afternoon and welcome to HYCM's webinar, FX Week Ahead, Live Market Analysis with myself, Giles Coughlin. It's great to be back. I've been away for 2 weeks on holiday, so it's lovely to be back. I've been to Wales, and that's a beautiful place full of green mountains and golden beaches. So I'm back fully recharged, ready for the market. So just got to say hello as people are coming in. Hi, Emil. Hi, Emily, Gabrielle. Sammy, great to have you back. Van, you too. Guy, I've responded to your question, and if you ask one of the account managers, Guy, they should be able to confirm that question for you. Now, just as other folks are coming into the webinar, I will just make it clear, as we're going through this webinar, the whole idea of this webinar is about education. Now, one of the things that I feel really passionate about is when you understand the reasons why the FX markets are moving in certain directions, you're much better placed to take successful trades. And so what I'm trying to do during this half an hour is to flag up, you know, the major focus that the market is looking at for this coming week. And when we get ourselves in line with the market focus, it's much more easy to find successful trades and to preempt large FX moves. So that's what we'll be doing. We'll be looking ahead at the calendar for the week and trying to put that in context and understand what potential opportunities we've got coming up. But the thing to remember is that this isn't trading advice. And the reason that's so important is because market dynamics are very fluid and they change very quickly. So, for example, one data point can sometimes come out which can change an outlook for a currency. So you have to be in tune with the market. So what this whole FX week ahead is designed to do is to get you in tune so that you can recognize the main market themes and crucially recognize the changes. When you recognize the changes, you're much better placed to make successful trades and to see opportunities as they arrive. So the first thing we want to do is, before we look ahead, we want to look back. Very often in FX trading, we want to see what the expectations, what the context of the market is, and in doing so, we can spot opportunities. And this week, there's a really good opportunity that's coming up on the US dollar. And I'm just going to start this analysis by looking back so we understand the context of the US dollar and why US data is going to be particularly important this week for the US dollar. Now, last week, Fed's chair Powell, he signaled very clearly that a July rate cut is coming. So last week there was the semi-annual testimony. Now, these semi-annual testimonies can be more market moving than the Fed's general comments, because, you know, it's semi-annual, it's the middle of the year, so it can be given greater significance and also gives the Fed opportunity to signal any sort of major moves. And Powell took this opportunity to signal a July rate cut, and he gave a dovish outlook for the US economy going forward. So the thing to really be aware of for the US dollar is that Powell was giving reasons about uncertainties about the global economy, that there was lower inflation than was expected, that there was downward revisions of estimates of the natural rate of employment, and so a few key metrics Powell acknowledged as slowing down. So going into Powell's testimony, the market was pricing in a 25 basis point cut in July, okay? And there was around a 2% probability of a 50 basis points rate cut, okay? Now, what happened after the semi-annual testimony was Powell was seen as so dovish that a 50 basis point rate cut was seen as now a 30% probability after Powell's testimony. So that's a half a percentage point rate cut. So the market was recognizing, okay, there is a possibility now that Powell cuts interest rates at the end of July when the Federal Reserve have their rate meeting by half a percentage point, by 50 basis points, okay? So the market sold off the US dollar on this increasingly dovish outlook by Jerome Powell, okay? So as a consequence, US data is going to be really important this week because the market is viewing the US data through this lens of Powell's dovish outlook. So does the US data confirm that dovish outlook, or does it question it? Now, obviously, one data point is probably not going to deter Powell from his path. But when we see dovish data points, it means that Powell's dovish outlook is going to be confirmed. So we're more likely to see a stronger reaction in US dollar selling coming up, okay? So that's one key event that happened last week, and we'll be looking through this week as we look at the calendar shortly. We'll be looking at it through this lens, okay? There's a number of different data points that are coming out for the US economy. We've got retail sales tomorrow, and we've got some Fed members speaking, and we've got Thursday, we've got the Philly Fed Manufacturing Index and consumer sentiment on Friday. So there's a number of data points that'll be coming out, but that's the big picture. You know, is Powell's dovish outlook confirmed, and is the case growing for a 50 basis point rate cut in July? That's the big picture. Once you've got that big picture there, you can start to see potential opportunities for shorting the US dollar this week. So that's what I'm looking for. I'm looking for opportunities to short the US dollar this week on negative data points for the US. That's the US picture. Now, the other event that's worth being aware of from last week is the Bank of Canada. Now, the Bank of Canada met and they have maintained their target rate flat, and they were slightly more dovish than the market was expecting. However, the Bank of Canada has kept a neutral stance. Now, this has been positive and remains positive for the Canadian dollar. It's simply because a lot of central banks around the world are shifting to a negative stance. So we've got the Reserve Bank of New Zealand expected to be cutting their interest rates in August. We had a cut from the Reserve Bank of Australia of their interest rates last month. We then have the Bank of England, who are reducing their economic outlook. We've got the European Central Bank, who have been indicating that further easing may be coming, and the market is beginning to expect a interest rate cut out of the ECB. So in this broad context of central banks cutting their interest rates, the Bank of Canada, by keeping a neutral stance, by saying, you know, we're keeping things as they are at the moment, we're not indicating any rate cuts. This is actually, in the current environment, this is supportive for the Canadian dollar. So there is some important data coming out. We will cover it as we go through the calendar, but I wanted to flag this up in advance. The important data coming out is CPI, inflation data coming out on Wednesday, and that will be important for the future path of the Canadian dollar, especially for this week. So that's something really to keep note of. But into Wednesday, we can expect the Canadian dollar to be bought. There's going to be buying pressure. However, we have to always remember, whenever we're trading Canadian dollar, we always have to have an idea of what oil is doing. The US dollar Canadian dollar currency pair has a 96% correlation to US oil prices. So they move in tandem. So if oil is going up, Canadian dollar is bid. If oil is going down, Canadian dollar is sold. So we have to be aware of that dynamic whenever we're trading the Canadian dollar. It's a very strong correlation to US oil. Again, a slight point which I've mentioned to some others before, but I wanted to mention again, is it's always worth reading the central bank's rate statements. This was the central bank's statement here. I just did a quick screenshot for you guys. When you read it, if you notice, you get some really good explanations as to not only what the central bank is focusing on, which is very important, but also you get a background information on the global economy as a whole. So you can see here in the third paragraph, the Bank of Canada writes, policy is responding to the slowdown. Central banks in the US and Europe have signaled their readiness to provide more accommodative monetary policy, and further policy stimulus has been implemented in China. In this context, global financial conditions have eased substantially. The bank now, so you start to get a bit of a picture of what's going on globally. So particularly when you're starting out, you're trying to understand fundamental analysis, read the central bank rate statements on the central bank's website themselves. All the central banks have websites. All the central banks publish their rate statements on their own website. So they're very easy to get hold of. When you read it, you'll be able to do that quite nicely. And again, you get hints as to what the central bank's focusing on. Again, just to be aware of the US-China trade war, we're currently at a kind of ceasefire between China and the US. It was on the back of President Trump meeting President Xi of China, and President Trump has agreed to not add any extra tariffs on China. So we're in a slight lull. Now, it's not so much to be calling a truce, but it's a minor ceasefire, or the US is not going to be adding extra tariffs on China. So this could break at any time. And remember, if it does break, we're going to see a move into risk assets, and a move into risk assets are things like the yen, the Swiss franc. You're going to see gold being bought. This is the kind of moves that you get when you have a risk-off environment. So let's start looking at the week ahead, and we'll start up with data out of China. Now, the data out of China, GDP data, came in at 6.2% versus 6.2% expected. Now, if I just show you this data here, the orange bar chart and the left-hand scale is what you're looking at. So the GDP data came in at 6.2%. So you're looking at this orange chart here, and you're looking at this left scale. So you can see that the GDP data was 6.2 as expected, and that is the lowest data point since about 1993, 1992. So that is a very low GDP growth for China, and this has been largely expected. Obviously, the US-China trade war has been slowing down Chinese GDP growth, and the market's at the moment trying to understand, what this means. Now, this figure 6.2 was expected. It wasn't a big surprise to the market. But what happened is there was a rally in the Australian dollar overnight, and that was because some of the Chinese data was better than expected. So the industrial production year-on-year data came in at 6.3% versus 5.2% expected, and the retail sales came in at 9.8% versus 8.5% expected. So there was some rally in that expectation that the Chinese economy is really slowing down. There was some relief, and one currency that traders trade as a proxy for the Chinese yuan is the Australian dollar. Because about 30% of Australia's GDP comes out of China, when there's good news for China, it is by association good news for the Australian dollar. So that's why we had a strong rally on the Australian dollar this morning, and that's a trade I was looking to join that Australian dollar strength on the back of this Chinese data that was taking place today. So you can see here that the retail sales was a slight beat, 9.8%. This is the right-hand scale. So although it's still low, just moving off these 1997, 1998 lows, that we saw down here. So that's been the reason for the relief that we've been seeing out of the Australian dollar and the New Zealand dollar. The so-called commodity currencies have been benefiting from that, and the commodities have been supported by a weaker US dollar. And that weaker US dollar is on the expectations of a more dovish Fed. Now, some more data that's interesting is the CPI data. Now, this CPI data is coming out of New Zealand. Now, obviously, inflation is one of the most important indicators that central bank focuses on. So this is very important for the Reserve Bank of New Zealand. Now, they are set to cut rates in August. That's the market expectations. So obviously, if the inflation is high, then if it's a very high reading, then obviously those expectations can be dialed back. If inflation data is a low reading, then it's more likely that interest rates are going to be cut. Okay, so a low inflation data will be negative for the New Zealand dollar, and a high inflation data will be positive for the New Zealand dollar. But remember, expectations are for a New Zealand dollar cut. Okay, just to be aware of that. Now, here's the expectations. So even though the CPI rate is expected year on year to be a beat of 1.7%, to be a beat on the first quarter of 2019, the New Zealand Bank is still expected to cut interest rates in August. So there's a potential opportunity there coming up. And I'll just show you the chart that I'm looking at later tonight. I'm looking at the pound New Zealand dollar chart, and you can see that the pound New Zealand chart is being sold off quite heavily at the moment. The pound is remaining pressured by ongoing Brexit uncertainty, the risks of a no-deal Brexit. They keep growing. Boris Johnson is set to be the UK Prime Minister come sort of the end of UK summertime, and that's keeping the pound sold. Okay, and at the moment, the pound is a sell on the rallies currency for the foreseeable future, because there is a very little potential good news to come out for the pound. Okay, the New Zealand dollar has been well supported today. It was boosted by that Chinese data. Expectations for an improvement in the second quarter CPI has been supporting the New Zealand dollar as well. So a short pound New Zealand dollar trade is a trade I'm looking at potentially to join in the US session. If I get a retrace, I'm potentially looking to join that pound New Zealand dollar movement. But if we get a positive CPI report, there could be a potential to trade a short spike down. So if we get some really positive New Zealand data out of the Reserve Bank of New Zealand tonight, then a short pound New Zealand dollar could be a very quick, sensible trade to take. So that's what I'm looking at, potentially entering on a good, a good CPI figure here on the pound New Zealand dollar pair for the reasons that I've outlined. So that's what I'm looking at later today. Okay, so moving on now to Tuesday, we got a slew of data out of the UK. Average earnings, they have been well supported recently, but the outlook for the Bank of England, Bank of England outlook has deteriorated recently. They've been more pessimistic about the economy, and everything is very Brexit related. But so any weak average earnings will just play into people's fears, and any strong readings are likely to be sold. Okay, so this is a potential sell, not sell the rumor by the fact, but fading the sentiment. So if that's a very strong number, then you'd expect the pound to rally and then be sold off on the back of the news. US core retail sales. Now these retail sales are important for the US for the reasons that I've outlined. The outlook for the Federal Reserve is a July rate cut. The retail sales here, if they are poor, then that's going to confirm the rate cut. So it's US dollar selling, and if those readings are very poor, then it's going to raise questions of a 50 basis points rate cut. And again, we got Fed Chair Powell speaking, and the FOMC member Evans speaking. So two important Fed speakers there. So Tuesday, there's potentially some market moving action from the retail sales. Now, in the UK, we've got real wage growth is still very positive. So you look here, real wage growth year on year, it's strong. Average weekly earnings have been strong. CPI has been, hovering around that 2% target area. But if we start seeing wages dropping off, average weekly earnings, real wage growth falling off, that's going to be negative for the pound, and any uptick is likely to be still a sell on the rallies for the pound. It might be an opportunity to sell the pound at a better price, so be aware of that. And again, be aware of CPI data coming out of the UK. Again, exactly the same potential. The pound remains a sell on rallies, but obviously, CPI data is particularly market moving. So, but one to be aware of and have on your calendar. Now, the other big event I flagged up at the start of the webinar today is the Canadian dollar CPI data. Now, the Bank of Canada, they're keeping their neutral stance. When it comes to the CPI data, what we need to consider is basically the Bank of Canada, they noted that the headline and the core inflation are both near the target, okay? So inflation is near the target, and they see that they're expecting inflation to fall off towards the end of the year, okay? So any kind of uptick in inflation, any beat on this number is going to be positive for the Canadian dollar. So we want to look at that. We want to look at the trimmed CPI, and we want to look at the core CPI. And what we're looking here is we're looking for a beat on these figures to give us a good potential for a Canadian dollar long. Now, the pair to trade it against would be the US dollar. So there's potential for a US dollar, Canadian dollar short coming up this week. This data point alone could be the data point that could mark a potential entry for this trade, okay? I will be covering this in some depth tomorrow at the FX workshop that we do. I'll be looking at a potential US dollar, Canadian dollar short trade based on one potential entry is to use this data point as an entry. We'll be looking at that in some detail as a potential learning point, and I'll be explaining that tomorrow. But just for now, the CPI data is a key focus for the market on Wednesday. Thursday, we know employment data has been a key supportive factor for the Reserve Bank of Australia. So any drop in employment figures is going to be negative for the Australian dollar. Definitely one to be aware of there. Again, we have another data point out for the pound. Same conditions apply as I mentioned earlier, and we've got some Fed manufacturing index out for the US. That's worth being aware of. We're looking for a potential any slowdown in manufacturing, any slowdown in the US economy is going to be laying a foundation for the July rate cut and a potential 50 basis points rate cut. So there could be opportunities to sell the US dollar. We'll look at a potential opportunity in the US dollar Canadian dollar pair tomorrow, and I'll outline some of the parameters for that. Now, Friday's data, again, core retail sales out of Canada, important, but not as important as the CPI data, unless that is a significant beat. And we have some Federal Reserve members speaking at the end of the week as well. But apart from that, that will be closing out the week. We've got a quiet session now ahead with the next major event is the CPI data out on Monday. So that's out 11:45 GMT time. That's one to be looking at for. We also have, it's worth just flagging up the difference here. Now, the US dollar Canadian dollar pair, you can see we're currently just above 130. So if you look, you see the red line on this chart. This red line is the US dollar Canadian dollar exchange rate. The right hand side is the scale. So yeah, the red line here is showing that the US dollar Canadian exchange rate is around 1.31 number. Okay. Now, the blue line is the spread between the US and the Canadian bond yields. And can you notice how the spread between the yields and the US dollar Canadian dollar pair moves in tandem? So in other words, when the spread between the US and the Canadian bond yields rises, see the left-hand scale, the US dollar Canadian dollar pair rises in unison with it. Here you can see, you know, as the bond yield raises, the US dollar Canadian dollar pair raises. This spread is just the difference between bond yields out of Canada and bond yields out of the US. Now, if you look here, you can see, look, that the spread is very low, okay, indicating that the US dollar Canadian dollar pair has further to fall. Okay, you can see that gap between the two. Now, the gap doesn't tend to last very long before one catches up with the other. And you can see that the last time that the US Canadian bond yield was at this sort of 0.2, 0.3 level, you can see that the US dollar Canadian exchange rate was about 1.26, 1.27, okay? So at the moment, we've got the US dollar Canadian dollar pair is at 1.31. So there is a really strong potential for a large fall in the US dollar Canadian dollar pair. So that is a currency to be really looking out for. And that's why we're going to spend tomorrow looking at the 1 o'clock to 2 o'clock GMT. We're going to be looking at a potential entry for the US dollar Canadian dollar pair. How we go about it technically, just going through the rationale, the reasonings for the trade, and potential ways to enter it. So that's what we'll be doing tomorrow. So if you like the sound of that, do pop on and I'll explain that in some detail. But otherwise, there's lots of opportunities this week and lots of events to be keeping an eye on, particularly that's US data, New Zealand CPI data, Canadian CPI data on Wednesday. Lots of opportunities, plenty to keep your eye on. So when you're learning this stuff, focus in on those details, focus in on those readings, follow them as they take place. Once you start to read up and see the expectations, see analyst response, you'll soon get into the flow of, you know, what you're looking for and how to take advantage of them. Okay, so just before I close, the one-to-one coaching with me, if you deposit $1,500 to HYCM's platform, you get a 1-hour coaching session with me. I will help resolve any personal trading queries you have. If you deposit $3,000 with HYCM, remember this is your money in your trading account. This is just something that HYCM do as an incentive for people to join them as their broker. But if you deposit $3,000 into your own account, you get the 1-hour coaching session with me and 1-hour follow-up. Similarly, with premium, you get the $10,000, you get 2-hour coaching session with me and 1-hour trading follow-up and 1 week VIP support from me. So that's just something to be aware of. That's the offers that we've got. Other than that, I hope you guys have a really good week, and I hope to see you tomorrow for the webinar, and we'll be looking at that US dollar Canadian dollar currency pair potentially. Now, if I don't see you tomorrow, don't remember that these webinars are recorded, so you do have opportunity to look at them yourself. Okay, guys, you have a good week, and I look forward to seeing some of you tomorrow, and we'll look at some more details for potential US dollar Canadian dollar opportunities. Thanks, guys. You have a great week. Bye now.